Hey DeFi holders, this is Corinne, the host of the Amun Inside Crypto podcast. Welcome back to another show. It is our 13th DeFi episode. Lucky number 13, or maybe unlucky number 13, who knows? So as usual, we are going to jump right into our TLDR. So there are lots of things going on in crypto. The market hasn't changed too much. I feel we're still more in that sort of horizontal action. We're influenced by macro in a sense. And we saw that last week with data coming out, the price going down, the price coming back up again. But on today's show, one of the things you guys will notice is strategic partnerships. This relates to a Chainlink article where they talk about strategic partnerships. And I think this is interesting as well. Even in a bear market, you'll find crypto companies are trying to work together, trying to do things together. Even as the host of the podcast, I get approached by people all the time. Hey, we should do something together. We should do a partner podcast, or I go on somebody else's podcast, someone comes here. And I think what you guys can take away from this is the potential for partnerships, long-lasting partnerships, rarely occurs in the bear market, whereas in the bull market, you're just focused on money, how to make money fast, money's coming in. In the bear market, you're creating a great foundation for a long-lasting partnership. The next thing we'll talk about, again, connected to partnerships, is revenue generation. And if you guys follow my Twitter, you guys know I've been looking at Token Terminal, a wonderful source of free data. While we had the episode with Tom last week on Dune Analytics, Dune requires a bit of programming and again allows you to get a more broader sense of data. Token Terminal doesn't allow you to do that, just gives you the option of finding out data yourself. And one of the things I posted on my Twitter was which protocols were making money, right? And actually, not a lot of protocols are making as much money as you think. Like gross revenue is fairly significant, but net revenue is actually not that much of money. People are making like low four figures in some sense. Today, we can talk about synthetics. Again, we've talked about them on the show for a long time. And again, I know some of you have said like, what is derivative assets? What is synthetic assets? CoinGecko did a wonderful Twitter thread explaining how synthetics works. And I think the cool things to take away from this is that how you can explain stuff in a very simple way without graphics, just short, concise bodies of text combined together, which bring people understanding about something. The next thing is Uniswap ATH. ATH is all-time high on Arbitrum. Arbitrum is another layer 2 solution right on Ethereum. Again, if you heard me talk about it, and again, this is not my opinion, this is the opinion of our head of research, Ellie, who says that L2s are going to get a lot of the traffic going forward. And we can see that with Uniswap, right? They doing a lot of money and a lot of revenue and a lot of transaction fees on Arbitrum. The last thing I want to mention about is really cool is that Lido is now on Swissborg, which is a somewhat traditional financial institution combined with crypto. But that's interesting, right? That out of all the places that Swissborg could have chosen, they chose Lido to get into their system. What does that hold for the future? Who else is going to join? That is something else for us to talk about. All right, let's talk about our DeFi index token next. So DeFi currently sitting at 89 cents, down 1.88% in the last 1 week. Now, comparing it to staked Ethereum, if you're just holding Ethereum, staked Ethereum is currently a little bit better. I guess down 2.32%, DeFi down 5.51% at one point. Compared to Link, DeFi is better. Compared to Uniswap, Uniswap better at some places, DeFi better at some places. DeFi currently sitting at $110,190. No discount at the moment. The current constituents are still the same, though we do have one new entrant, which is Rocketpool. Rocketpool is a really cool, like equivalent of Lido, is that where you can stake your Ethereum, right? Definitely check them out. Make sure you follow us on Twitter, right? Twitter.com/Amun, because I am posting about new constituents when they do happen. Rocketpool, lots of interesting stuff going on there. We'll talk about that just now. And yeah, that is it, guys. Let's look at Ethereum's TVL on Defilama very quickly. Ethereum's current TVL is locked at $31 billion, a change of 1.13% in the last 24 hours. So up 1.13%. That's great. MakerDAO 25% dominant. Lido number 2, Curve number 3, Uniswap number 4, Aave number 5, Convex number 6, Compound number 7, Instadep number 8, Balance number 9, Frex number 10. Arrakis is no longer in the top 10, Rocketpool no longer in the top 10. But we see TVL and Maker 7.77 billion. Then we have Lido, because they're spread across a few places, 5.84 billion. Curve 5.44 billion. Uniswap 4.59 billion. Aave 3.88 billion. Convex 3.84 billion. 2.3, 1.7, 1.51, and then we have the biggest drop, I think, between 9 and 10 right, is balanced at 1.21 billion, and then Frex, $844 million. All right, as usual, guys, we have a news segment courtesy of CNBC Crypto. Have a look, a great summary from 2 days ago about what happened last week in crypto. As usual, if you don't want to watch it, it's only roughly 2 to 3 minutes. You can skip ahead right now and you can come listen to our first story, which is about Chainlink.
Today, Bitcoin holds around the $19,000 level. Tether makes a big change to its stablecoin reserves. And Ben McMillan of IDX Digital Assets breaks down the state of crypto markets. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Let's take a look at today's prices. As of noon Eastern, Bitcoin held at about $19,000. Ether was back above $1,300, and Solana traded up around $30. Crypto markets have seen volatility following yesterday's hotter than expected inflation report. Immediately following the report's release, risk assets dropped sharply before reversing course later in the day and soaring. Crypto jumped yesterday, mirroring that movement in stocks. Investors have been closely watching inflation data for clues on whether the Fed will continue its aggressive rate hikes. Amid that uncertainty, Bitcoin and Ether are on pace for their fourth down week in the last 5. Okay, let's talk about the top stories. First up, the world's biggest stablecoin cut its commercial paper holdings to zero, replacing them with U.S. Treasury bills instead. In a blog post, Tether said the move is part of the stablecoin issuer's ongoing efforts to increase transparency and back its tokens with the most secure reserves in the market. This is all in an effort to ensure investor protection. Commercial paper is a type of short-term unsecured debt issued by companies, and it's considered to be less reliable than Treasury bills. The announcement comes 5 months after the collapse of Terra USD, which cost investors tens of billions of dollars and led to fallout across the crypto ecosystem. It also comes more than a year after Tether had to pay a multi-million-dollar fine following a legal battle with the New York Attorney General's office over concerns tied to the viability of its reserves. Data from CoinMarketCap shows that currently there are about 68.4 billion Tether tokens in circulation, and that's up from 2 billion 3 years ago. Next, crypto trading firm NYDIG is laying off about a third of its staff. The Wall Street Journal, citing people familiar with the matter, reported that 110 employees have been cut in an effort to trim expenses and narrow the company's focus to more promising business. The Bitcoin service company announced in December it raised $1 billion in funding to build an institutional-grade Bitcoin platform with the goal of expanding access to retail customers. However, since that fundraising round, the crypto market has plummeted. The reported layoffs are the latest in a slew of crypto job cuts, including at crypto exchange Gemini and Coinbase, as trading volume has dried up amid the so-called crypto winter. We reached out to NYDIG, but as of noon Eastern, we have not yet heard back. Last, an alleged crypto hacker has agreed to pay $22 million to his victim.
So it says how to find and nurture strategic partnerships in Web3. Interconnectivity is a hot topic in the Web3 community at the moment. So this article is about October 16. It says, so let's look at the key takeaways first. It says Web3 moves fast. Don't wait for traction to start building partnerships. Invest in thorough research rather than waiting for connections to form organically. Again, yeah, no, this is really true, right? Don't wait for traction to start building partnerships. Sometimes it's really good to get in early with somebody before they get any traction, and then together you guys can grow together, do stuff together. Invest in thorough research rather than waiting for connections to form organically. So research, again, this might mean something else, but I think it just means researching the space, researching people you work with. Thankfully, we have some wonderful people at our research arm. You guys have seen them pretty much all on the podcast, from Tom to Adrian to Ellie. We have not met Ram or Carlos just yet. Partner with Web2 businesses too. They can be challenging to work with, but also offer bigger growth opportunities. And I think this is something that loads of companies are doing at the moment. We just talked about Swissborg and Lido. Swissborg is not really a Web2 company, but like Web 2.5. But trying to bring more companies into the Web3 ecosystem is a fantastic idea. The more adoption we can get, the better everyone will be off. Craft your intros carefully and pitch your potential partner like you would pitch a VC, right? VC's venture capital firm. I think people are so busy in Web3, in crypto and blockchain, it's really hard to get people's attention. For example, I'm still trying to set up a Pico, Polygon ecosystem token Twitter spaces, right? We had a fantastic, Solana Twitter spaces, but it's so hard to get people to say, hey, come sit down for an hour, talk. So I think a pitch deck, a very carefully crafted pitch deck, explaining to people why you want to work together goes a very long way. Next, invest in the relationship with personal gestures and regular check-ins. This is something I try to do as well. I try to check in with the people we talk to, check in with the people that, I would like to talk to and develop a relationship with. For example, Mango from our Solana index, they had a horrible experience last week. 100 million lost through to an exploit or hack. Again, depending how you want to look at it. That's it, right? As soon as I heard about the hack, I sent our contact a message, say, hey, are you okay? Do you need anything from us? And they're okay. But I think that is something people forget to do in the online world. I come from a day and age where I remember there was no internet when I was growing up in South Africa. You had to phone to check in, and that is something I regularly believe in. I really believe in checking in on people. And I have a list on my Google Notes where I have a list of people like, hey, I should send this person a message because I have not sent them a message in a long time. Next thing is be strategic and careful with language when making announcements. All right, this is something I need to practice. I think everyone needs to practice what you say, how you say it, and you choose the words that you do when you are making announcements. All right, guys, we're almost at 10 minutes and I have just been talking about all of this. Okay, definitely check out the rest of this article. As usual, links for everything will be down in the show notes below. If you have any questions, please reach out to me. Please reach out to Amun. Let's move on to the next story, which is about Messari. So it says, as of September 30th, 2020, there are 495 active subgraphs on the Graph protocol. Decentralized mainnet, which is a 26% increase quarter over quarter QOQ, is that the spoils of this work can be seen in the integration of subgraphs into a protocol metrics feature, which can be explored below. The graph revenue increased 11% quarter over quarter. That's pretty impressive. We can see quarter 3 2021, $5 in revenue, $17,000 down in the beginning of this year because of terrible economic times. Then it's up $63,000 in quarter 3 this year. That is impressive. It may sound not like a lot of money, but again, that's a start, right? You have to go somewhere. Crypto is continuously building, and I believe as people continuously build, they will scale. Revenue will scale accordingly as well. All right, good for the graph. Good to see that they're making money. Let's move on to our next story, which is Lido. So this is about the Swissborg story. And again, Swissborg, for people in Switzerland, you can go out here and check them out. So this explains what is Lido, and we already know that. So it says Lido DAO members include Semantic VC, Parify Capital, Libertas Capital, Terra, Bitscale Capital. Okay, a lot of other companies. When was it launched? Launched in December 2020. There are several challenges with the staking on the Ethereum blockchain. Users can only stake multiples of 32 ETH. A degree of technical expertise is needed in order to stake. Also, the staked ETH are locked with the initial phase of ETH 2.0. It cannot be used in other protocols. ETH 2.0 already launched. Users cannot access or unstake their assets until the lockup period is over. This stops them from being able to earn additional yields from other DeFi protocols on the market. The complicated validator system and barriers to entry make it difficult for individual and retail users to navigate. What is staked ETH? Solution it proposes. So this tells you what you can do. If you are a Swissborg user, download it and install the Swissborg app, set up your Swissborg account. A detailed tutorial is available on opening an account page on the Swissborg Help Center. Transfer fiat or crypto funds into your Swissborg account. Search for the token by typing Lido, and then you get Lido. Fantastic. So I think with these sorts of institutions adopting Lido and Lido Finance and LDO, it's definitely more advantageous. Hopefully you guys enjoy it. I think this is interesting. If you're a Swiss user, if you are a Swissborg user, let me know how easy it is to get Lido. I'd love to learn. All right, let's move on to our next story, which is Uniswap Labs. It's been 1 year of Uniswap V3 and Arbitrum, and we just hit an all-time high of 78.7% market share. So Uniswap is really dominating Arbitrum. Again, not surprising because they are Uniswap. They do have the resources and technical know-how to do so. So it shows Uniswap V3 September. This looks roughly like, 78.7%. That means everyone else is just, there's not a lot of people in Arbitrum at the moment. That being said, I believe regular people are not using L2s. What I mean by regular people is people like me. Like, I'd love to use Optimism or Arbitrum. I have no motivation or incentivization to do so. We're in a bear market, right? My money is locked up in a few different places. Why should I go to Optimism or Arbitrum? The fees on a lot of places are relatively cheap. If you're not on Ethereum, anywhere else is not costing you a huge amount of money. So while I think L2s, right, again, contrary to our researchers' opinion, are great. I do agree that they're great. I don't think regular people are going to start using them for some time until there is an easy onboarding process. Okay, let's move on to our next story, which is this. MakerDAO initiates $500 million investment in US Treasuries corporate bonds. Again, that's $500 million, right, from a crypto company into other stuff. This is from October 6th. You guys would have probably seen this story already. This is fantastic. This is MakerDAO said it has initiated $500 million investment in traditional assets using its reserve. So this talks about who MakerDAO is. MakerDAO explained the move as a way to strengthen the project's balance sheet with exposure to low risk, liquid traditional assets. So liquid, right, means that they can sell it for cash if they need to do so. For this allocation, the DAO has partnered with an asset advisor firm called Monetalis. This firm will act as the asset advisor as well as form an acceptable legal structure for the MakerDAO protocol to gain exposure to traditional assets. Here, the DAO aims to invest 80% of the allocated sum into short-term US Treasury bonds, whereas the remaining 20% will be invested in corporate bonds. The 80-20 split between Treasuries and bonds remained the favored approach during the voting process. This showcases the opportunity associated with the move, and seeing such adamant support from the community is very exciting, said Nadia Alvarez, head of Maker Growth. All right, very cool. Good for Maker. I think we can see a lot of crypto organizations will try to move some of their assets or extra treasury into traditional reserve assets or traditional bonds just because they are the safer asset. We've seen that in the last 1 month or so, as people have been flocking to the US dollar, US Treasury bonds from other countries, just because the way the global economy is looking is not great. So I guess that makes a lot of sense for Maker. I wouldn't be surprised if other institutions try to do that. There is that whole crypto ethos thing of saying, hey, centralized investing is bad, we should stick with decentralized stuff. I still think if people can convince their DAO users or voters to go this way, it'll get done. All right, let's look at Curve. So this is on April 14th. We informed Curve and affected projects about a read-only re-entrancy vulnerability in some Curve pools. More specifically, the value of function getVirtualPrice can be manipulated by re-entering it during the removal of liquidity. Now, since all teams secured their projects, we are happy to share the technical details. So basically what this is, guys, is Change Security is an auditing firm. They found a bug in Curve and a bunch of other protocols, so it's not just Curve. And they told these organizations, hey, fix this. They got it fixed. And now they're telling people, again, if you're technically interested or you're a programmer, this might be something for you to read into. And yeah, it's good that this gets discovered. It's good that people are doing this stuff. This is vulnerability analysis. While it requires some preparation, the attack vector starts in the remove liquidity function of Curve stable swap pools. We will illustrate that with the code of STF pool. Note that the Curve pool protects itself from re-entrancy by using the Viper native re-entrancy guards, which were placed on every state altering function. Okay, this explains some of the coding stuff. Again, if you're a coder, I do not want to bore you guys to death. While you guys know I'm a bit interested in coding, I know a lot of people are not. So I'm just briefly going through this. This talks about the effects on other pools, future solutions, make the re-entry locks public to allow developers to decide whether or not they want to revert in case the lock is active, revert in view function if the lock is active. A really cool article to read if you're into programming. Let's move on to our second to last story. So this is a really cool tweet thread, as I alluded to in our TLDR. This explains how Synthetix works. So it says Synthetix has been the talk of the town, with SNX related social media mentions up 80% in the past week. Let's dig deeper to understand what Synthetix.io is, how it works, its tokenomics, and more. What is Synthetix? Synthetix is a DeFi protocol that facilitates the issuance and trading of synthetic assets on Ethereum. Similar to derivatives in traditional finance, synthetic assets are assets that derive their value from crypto and real-world assets. So it could be something for oil or for corn or something like that. Synthetix's native token SNX offers collateral against synthetic assets. You can buy and sell real-world assets like commodities by generating synthetic assets that track their real-time prices through Oracle feeds. Synthetix's privacy requirements. Unlike legacy systems, Synthetix doesn't require you to provide personal information or pass know your customer and anti-money laundering processes. In fact, you don't even need to create an account. Again, this is the beauty of decentralization in crypto. How does Synthetix works? Blockchain tokens known as synths are issued to represent real-world assets in a market. Each synth is backed by a system of guarantees, participation, inflation, control fees and governance. Example, if you want a synth representing copper, the protocol will issue you with a token such as S-copper. Since the token is issued on the Synthetix chain, it is supported by the entire Synthetix infrastructure and governed by smart contracts. Synthetix is tokenomics. In March 2019, Synthetix IO developed an inflationary token supply mechanism for incentivizing stakers. This will end in September 2023 as the token total supply of approximately 250 million SNX. Alright, so this is staking rewards. Looks like most of this is for staking rewards. Team and advisors, a small amount. Foundation, a small amount. Partnership, really small. Bounties and marketing incentives, really small. Investors and token sales. Again, not bad, right? Not bad at all. At this point, the protocol will transition to a constant 2.5% annual issuance rate. That's the inflation rate. However, its founder, Cayenne, has submitted a proposal to end SNX inflation and cap its supply at 300 million tokens. Wow, that's cool. All right, guys, I don't want to keep going on about Synthetix. Let's move on to our last story. Please feel free to go through this tweet thread over here. Let's talk about Rocketpool. Rocketpool is our latest constituent of the DeFi Ecosystem Index. Really cool. So this talks about creation and grants of bounties and management committee. Our PIP 10 sets aside 30% of the PDAO budget for grants and bounties. The details of the mechanics of awarding grants and bounties were discussed in a forum post and in the grants thread on the Discord governance channel. Based on that previous work, we would like to suggest an outline for Grants and Bounties Management Committee, hereafter GMC, including guiding principles and governance. Okay, let's look at the motivation. I don't think we're going to read through the entire thing today. The Rocketpool community has always strongly contributed to developing a Rocketpool ecosystem. From marketing outreach to developing online tools, the community has self-organized and satisfied their own needs. The community has previously voted to allocate a portion of the PDAO budget to rewards such as past contributions and to incentivize future ones in the form of grants and bounties. Having an established transparent framework for awarding of such funds will reinforce confidence in the protocol, as well as further incentivize and reward community involvement. With this proposal, Rocketpool will further develop its rich ecosystem, rewarding contributions and enhancing the Rocketpool experience for every member. So we've talked about incentivization in crypto a lot. And this is more about it, and I think incentivization is very important. But at the same time, you need to incentivize in an economic and financially sustainable way. I think Rocketpool is doing this, but you guys can judge and tell me, have a look, and let me know what you think. All right, let's go back to our DeFi ecosystem page, and let's have a chat. So guys, I hope you guys are okay. I hope you're enjoying the start of the week. It is the middle of October. A lot is going on. This week, Friday, we have a special interview, one that I'm really excited about. We are interviewing one of the game leads from Congregate. Congregate is one of the probably the biggest, if not the biggest, online gaming platform, free gaming platform for people. If you have teenagers or if you have kids or university student and you have no money to game, you most likely use Congregate to play games. And they are jumping into the GameFi Web3 space with a project called Blood Vessels. The game lead came on and he talked about it, and I'm really excited for you guys to listen to it. It was a fascinating interview, and I hope you guys will enjoy it. Otherwise, guys, keep an eye out for more content. See you guys next week.